financialballs.com, and I'm here with your biweekly market recap along with some setups for the following weeks. So to look at here, there's a chart of the S&P 500. So far, the past 2 weeks, we've had a sharp retracement down, and of course, this has been in the midst of the Eurozone crisis and the Greece debt crisis. And that was basically, as you all have been probably following the news, Greece was very close to leaving the Eurozone and actually defaulting on its debt. And the fact that they're ruled by socialist leaders didn't really help their cause. But as of right now, it's actually midnight on Tuesday. The Greece actually did just secure a agreement with the Eurozone creditors, where they decided that they will inject $86 billion pretty much in liquidity through the troika into the Greek financial system in return for much needed reforms in Greece. And I believe Greece will be voting on those reforms by tomorrow. So in response, obviously, the markets were up a ton. So you can see here, up 1.1% for the S&P 500. And the cool thing about that was this follows a day when the market was also up a ton. So you rarely see these two-day fall-throughs where pretty much 2 days in a row the market's up big. And we were consolidating after this big down move on the 29th, and a bunch of traders were wondering which way we were going to go. Then this huge down move happened on the 8th, and now we've just whipsawed back up. So honestly, for the short-term direction, I would actually be bullish given the positive momentum created by these fundamental news events. And as you can see here, an important level is around 2070. That was support. Tried to break below that. We couldn't hold it. And now we're back above that those June lows and those May lows. So basically, I would say that as long as we're above that 2070 level, then it would just make sense to play stocks to the upside. And another point that I want to make about why I have a bullish thesis on the market right now is because recently China, as you can see here with the FXI, or I believe I can go to the actual index. Yeah, so this has been a huge story too. The market has just been murdered, gone from 700 to 460. So obviously a huge percentage decrease. And this is happening after a huge run up in Chinese stocks. So Chinese stocks are still way up for the year, and Chinese stocks have had a tremendous run, and it makes sense that it's coming in now. But this is from what I've read. This is a very sketchy market where you have the government intervening, trying to support stock prices, which mostly never works. And you have a lot of IPOs. You have a lot of just crap companies, pretty much, that are trading at insane price to earnings ratios. So basically, I'd stay away from this. But the point that I'm trying to make about this market's action in relation to our market is that the fact that this market has been decimated, and China is a pretty big market. I mean, these are companies with billions and billions of dollars of market value, and how our market is responding by, shooting up in response to, Shanghai going up, but still. I mean, the markets have been acting okay given the action in China. So the fact that China hasn't been a headwind and Greece just secured a deal, in my opinion, will lead to higher prices, and it already has in the past 2 days. So I think it's just a matter of time until we reach new all-time highs. Now, to go to some specific stocks that I've been looking at. Sorry, one sec. Let's go to my watch list right here. All right. So I put all these stocks on yesterday, actually, as you can see the entry dates right here. And I just did the video 1 day late, so just assume that I put this on my watch list yesterday. So here are some stocks, actually, that I went over in my video last time that I was looking at. Netflix, and these were stocks that I looked at on the 22nd. So I saw some momentum in Netflix, and it had a nice 3-day rally. This was earnings, went all the way to 705, new time to new high, and then it kind of retraced, and now it's back toward that same level. So if you played that from the long side, that would have been a winner. ORBK, this was a loser, actually. I called it right here. So right at the top, I said to buy. And that happens. I mean, the stock rolled over. You can't do anything about it. That's just the way trading is. So you would have cut your losses if you were in that. CSTM was another one. This was a winner, actually. I played it from the short side. I believe, yeah, around here, actually. So that stock has gotten killed. Sell into that rally. Strong downtrend. That would have made sense. PGTI was another stock. 22nd was around here. Yeah, and I was actually, this was a cool, I call this top actually. I recommend to short around here. And I just saw that it was really extended from the 21-day moving average. And usually stocks can't stay too extended from their means for very long. So this was called a mean reversion trade, where I'm looking for the price of the stock to revert back to its historical mean. In this case, the short-term historical mean of the 21-period moving average. And I just saw that there's a lot of volume, and there was a doji high after a huge run up. Most likely the stock was going to head lower, and that's exactly what it did. And now it's going back up again, so you would have exited your trade when the stock came back to the 21-period moving average. Bank of America was another one. Yeah, I remember this was the day right here. Had another nice day of follow through, but then just got decimated, so can't do anything about that. Now for some stocks that I'm looking at for the next 2 weeks. I'm looking at LPNT, and I saw this right here. Huge run up, consolidation, pulled back to the 10-period moving average. I think this stock goes a lot higher. BLVD is another one. Same type of action. I mean, it broke out above $12, had a nice run up to about 13 and change, and now it's pulled back. Nice hammer today, actually. So I'd be looking to buy that. Oaks. This stock I actually saw right here, and I was thinking yesterday that it would be a good short. And the fall through today was tremendous. It was down 5% today when the market was up 1.1%. So Oaks Investment Corp, I don't know what they do. All I know is that they are being heavily sold the past 6 months, and there was a nice little relief rally that was probably just short covering in my opinion. And as we can see now, since the stock has touched new lows, it was just short covering. It wasn't actually institutional accumulation, which usually signifies the bottom of a stock. Baker Hughes, this one is another one. Actually, when it was up today, but I was thinking that maybe this bearish price action at the 10-period moving average, stock's been trending down, would lead to lower prices, and it still could, but I don't have as strong of a conviction as the other plays, given this big green bar, and that just shows some accumulation. So we'll see where that goes. And these are all trend plays, as you can see. I mean, the previous ones, I'll show you some mean reversion plays that I'm looking at. But I'm just, as you can see, BLVLD, I'm just going with the trend, going with the flow, the momentum. LPNT, going with the momentum. Baker Hughes, I mean, I'm just trying to go with the momentum. I'm selling into selling. And I like to diversify my trading, where I like to have some trend plays, but I also want to diversify and make sure that I have some just as profitable, given if you take adequate risk measures. So I'm looking at CUB for a mean reversion trade, and as you can see, the stock has been decimated from 50 to 45. It's in an ugly downtrend, and it's weak, it's downcharted, and that's a potential place to buy. So as you can see here, it's actually up 0.69% today with the market, but I'm just thinking that maybe given this kind of just this hammer right here, which is basically the stock tried to touch its previous lows and then rallied back above it, it's far away from the 21 period moving average and the 10, and then maybe it'll revert back to its mean. And then CNOB from the short side, I'm looking at this to revert back, and it did today actually. It was down 0.59% in a market that was up obviously a tremendous amount. So I was looking here, you have this, this kind of just reverse hammer, where pretty much if you just envision that the high was 22.36 and the close was 22.08. So it came a percent off its highs after a huge rally. It makes sense that the stock came in a little bit. But the same thing happened right here, and then it never reverted back to its mean and just kept on riding the 10-day, and that's going to happen. But as you can see, the stock's gone from 18.75 to 22 in just a little over a month, so it makes sense that it'll come in a little bit. So those are my plays, and we'll see how those plays play out over the next 2 weeks. But right now, the S&P, Greece is, I don't think long term, nobody really knows what will happen in Greece. Who knows if they'll need, another bailout, and if Europe will even be willing to give Greece another bailout. But right now, Greece is in the clear. Chinese markets aren't really affecting the U.S. markets, and the people are buying. So I would say go long and have some short positions as pretty much hedges for your long positions, if you'd like to say that. But even if you want to just have a market neutral approach where you want to go equal dollar amount short and equal dollar amount long, then that could work for you as well. So thank you for watching and happy trading.